Taking a look at today's interest rate markets, let's check in on the 10-year note futures today as they're realizing some further upside today. We're seeing them up now for a third consecutive session. And with that, we are currently right in the middle of that 132 handle, 132.16. Now, we did see a high of 132.23 spot 5 intraday, and that's challenging the highs for the last month. So we are hovering just below the recent highs for the 10-year note futures. And I think a couple factors why we're seeing this renewed strength here, at least from a short-term perspective. The market's working its way through the inflation storyline, and there's still concerns, but the Fed message continues to be very consistent on the fact that they do not expect to raise rates anytime soon. There's several Fed speakers through the last couple of days indicating such, as well as the rotation, I think, in the markets is causing another reason why we're seeing a bid in the Treasury markets. The equity markets are really coming under some slowing momentum and now actually selling pressure here, particularly today, where we're seeing the NASDAQ down about 2%, the S&P 500 down about 1%. And with that, I think it's creating a little bit of uncertainty, at least for the short term moving forward. And I think that's putting a bid back into the Treasury markets and why we're seeing the 10-year note futures up in that middle 132 handle. Now, when you look at yields today, we are seeing yields coming down from a high yesterday of 165 to currently 157 today on the 10-year note futures. The yield is hovering right around below 160 basis points. And we did see an intraday low of 155 basis points. So, as I mentioned, that's really the low end of the range for the last month. And so some moderation here, some renewed strength in the Treasury markets, and therefore we are seeing yields pushing back down into the middle to the upper 150 handles, currently right around the 157 or 157 basis point level.